Have you ever seen an entry signal, entered a trade, and seconds later everything went the other way? Well, maybe it's time to refine your strategy. In this video, you're going to learn a scalping method that combines EMA 10, EMA 20, and RSI to give you fast but filtered signals, as if an experienced trader is standing behind you. If you're looking for a small but sure shot, watch this video until the end. The market is full of noise and false signals. Especially on the 1-minute time frame, everything can be deceptive. This is where you'll only lose time and money if you don't have a strategy. This video is for those who are looking for fast but careful trading. I'm going to teach you how to understand the price direction using EMAs and filter your signals with RSI to only enter trades that are really worth it. Part 1. Why 1-minute scalping? Most traders use long-term charts because they think more time means better decisions. But the truth is that many profitable opportunities occur on shorter time frames, such as 1 minute. This time frame is for those who want to get in, get out, and get out fast. Especially if you don't have a lot of time or are looking for short-term day trading, scalping is the best option. Part 2. What exactly do EMA 10 and EMA 20 do? EMA stands for Exponential Moving Average. This indicator calculates the average price, but unlike SMA, which treats all candles equally, EMA gives more weight to the last candles. This means that EMA reacts faster to market changes, which makes it great for scalping. EMA 10 and EMA 20 are two of the simplest and most powerful tools you can use. When EMA 10 is above EMA 20, it means that the short-term trend is up. Conversely, if EMA 10 falls below EMA 20, it means that we are entering a bearish phase. Now imagine these two lines moving on your chart. When a cross occurs between them, the first entry or exit signal can be issued. But the important thing is that this cross alone should not be relied upon. That is why we also use RSI to filter out false signals. EMAs act as a fast price trace. They show how far the price has deviated from its usual path. If you use this tool in conjunction with support and resistance levels or candlestick readings, your power in technical analysis will multiply. But wait, we haven't reached the golden combination yet. Because the RSI is going to show you when to enter and when to wait. Part 3. The role of RSI in filtering signals. The RSI, or Relative Strength Index, is one of the most widely used indicators in technical analysis. It fluctuates between 0 and 100 and shows whether the market is overbought or oversold. Usually, if the RSI is above 70, it means that the market is overbought and a correction or decline is likely. If it is below 30, it means that the market is oversold and an upward movement may soon begin. But in scalping, the RSI settings can be different. For example, instead of the standard 14 period, many traders use an RSI with a period of 7, 5, or even 3. Why? Because on a 1-minute chart, you have to react faster. Short-term RSI responds to changes much earlier and allows you to make a decision before the opportunity is lost. For example, imagine that the EMA 10 is crossing the EMA 20 from below. This is a bullish signal. Now, if the RSI is also moving up from below 30, it is very likely that the price is ready to move up. This is where the RSI plays the role of a filter and gives a confirmation signal. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Part 4. Entry strategy, step by step. Now it's time to put everything together and create an operational strategy. That means knowing exactly when to enter, when to wait, and how to control risk. This is a step-by-step roadmap for entering scalping trades using EMA and RSI. 1. First of all, set the chart to the 1-minute time frame. 2. Add the EMA indicator twice and set its periods to 10 and 20. 3. Activate the RSI with a period of 7, or even 7.3 for faster reaction. 4. Now wait for the EMA crosses. When the EMA 10 crosses the EMA 20 from below upwards, the initial entry signal is issued. 5. But don't enter. First check if the RSI is also moving up from the 30 area at the same time. If yes, this is a strong confirmation for a buy entry. 6. The opposite is true for a sell. EMA 10 should cross EMA 20 from top to bottom and RSI should fall below 70. It is important to observe the risk to reward ratio. For example, take 2 times the risk to reward. If the stop loss is 5 pips, the TP is 10 pips. Entering without risk to reward is gambling, not trading. Also, pay attention to the trading volume, lot size. Especially on low time frames, sudden strong movements may occur. Last but not least, always practice this strategy on a demo account before implementing it on a real account. Especially to recognize the EMA crosses and match it with the RSI, you should practice several times to increase your speed of action. Part 5. Where to exit. One of the biggest mistakes traders make is that they focus only on the entry, but either underestimate the exit or go with emotions. Exiting a trade is even more important than entering, because the final profit or loss depends precisely on the exit point. Here I am going to tell you how to make smart exits so that your scalping will work. First of all, you should know that there are 2 types of exits: take profit and stop loss. The stop loss should be determined from the beginning, based on the market structure or ATR, average range. For example, if the ATR is at 5 pips, you can set your stop loss at 5 or 6 pips. If you take profit from the position, you can double your profit limit. But beyond the number, you can also use the behavior of the EMAs themselves to exit. If you see that the EMA 10 is approaching or even crossing the EMA 20, it means that the trend may have ended. In this case, it is better to close the position. Another way is to use the RSI to exit. For example, if the RSI reaches 70 and is turning down, it means that overbought conditions have occurred, so it is better to take your profit and exit. Conversely, for selling, when the RSI drops below 30 and then rises again, it can be a signal to close a sell position. Remember, a professional trader always knows in advance where to exit, not to decide in the middle of the market, because emotions are profit killers. A planned exit means peace of mind in trading, so from now on, take your exit strategy as seriously as your entry. Section 6. Mistakes to avoid. Many times, traders know what to do, but they still lose. Why? Because they make mistakes that seem small, but their impact is huge. This section is about the mistakes that, if you avoid them, will really boost your trading level. Mistake 1. Entering without RSI confirmation. Many enter just by seeing the EMA cross, without paying attention to the RSI. The result? Wrong entries in a row. RSI acts as a filter. You should always get its confirmation. Well, if you have watched this video so far, it means that you are really interested in becoming a professional in trading, so congratulations. But just watching this video is not enough. Real success starts when you get up and practice. Open the chart today, put in the 10 and 20 EMAs, adjust the RSI, and do your first back test. Now, I have a request. If this tutorial was useful to you, be sure to give it a like. It may seem like a simple like, but for me it means energy to make future videos. And if you haven't subscribed yet, it's time. Because on this channel, we are going to learn all about strategies, tricks, tutorials, and ways to get funding together.